Okay, in this video, we're going to be going over inverted fair value gaps, which happens to be my favorite entry model. An inverted fair value gap is effectively a disrespected fair value gap. You could imagine that we came in and we swept the buy-side liquidity, leaving a fair value gap as well. And then when you blast through the existing fair value gap, you invert it. So what was a bullish fair value gap becomes a bearish inverted fair value gap. Now, if we were to have closed here, this would have remained a typical fair value gap. As you see, we would have respected the 50%, and this would have potentially allowed for a move higher. But because we closed below it, that is what creates the inversion. Here's another example because you're going to see this a lot where you have overlapping fair value gaps. So once again, you see we sweep the buy side liquidity. We left a fair value gap here, and we left a fair value gap here. When you have two back-to-back fair value gaps like this, you can combine them into one. Now, once again, you have one fair value gap with the 50% encroachment that you would want to see respected. As you see, the first candle respects it, but the second candle blasts through, creating the inverted fair value gap. And again, this would become your entry right on the close. So let's go to NQ. This was just a few days ago. And you can see from a mile away, what did we do? We were sitting here ranging for a while. We did get pretty low here, so you could even consider the range here if you wanted. But what do? We make a clear manipulation leg higher, sweeping all of the previous liquidity. Once we get a liquidity sweep, we want to start looking for the inversions. So let's go down. Okay, so where is the initial fair value gap that gets created when making this leg higher? We have numerous back to back, so we would just consider them all one. This was the initial fair value gap that should have been respected if we would have continued higher. But instead, what do you see? This candle here immediately breaks through the 50% or the consequent encroachment, pointing to a bearish signature. But we do have to wait. And what are we waiting till? We have to wait until we get a close through what created the fair value gap, which we get with this candle here. So technically, you could have framed a short on the close of this candle. And with the gift of hindsight, we can see that this is a very easy 2R that ends up leading right into the next set of accumulation. So this is one example of how you can use an inversion as a way to make an entry. Let's find another example. Okay, so here's another example on NQ. We are on the 4-hour chart. And I'll show you that this even works on a higher time frame. And then we can go down to a lower time frame where we get another liquidity sweep where we can find a more precise entry. So as we see here, example 2 on NQ, we see on the 4-hour chart that we get a pretty obvious sweep down here. So let's go down to a lower time frame and see where we could have made a precise entry to catch this move higher. So as we see, when we get down lower, we can get slightly more precise. So we have this leg that manipulates down prior to the move higher. So we have this run of accumulation that gets swept out prior to the move. So first, let's mark out the fair value gaps that got created on the move down, which are right here. Now, as we can see, this displacement candle closes through, creating the inversion. So technically, you could have entered here, or you could have waited for a retrace back into the fair value gap for an even more precise entry. As you can see, this was an easy 2R trade. Now, you can even go to the next extension. If you are still bullish, you would do the same thing. Power of 3. After expansion, we have a retracement. We go down and we create that fair value gap, which do get inverted, and you could have entered long again here. As you can see, this was the manipulation leg. When we close above through what created this bearish fair value gap down, we would then enter for another long. And there's 2R, which is another one that we would have gotten. Let's look at another example. Okay, so now we are on gold. We're on the 4-hour chart. As you can see, we get another sweep here. There are plenty of fair value gaps that get created down, so we can just create one. As you can see, this displacement candle, we did close through. It is close, so you will get some people that will want to wait for another one, but this absolutely did create the inversion. So you could have entered here, and again, we're on the 4-hour chart, so this certainly would have been a more of a swing trade. So let's see what happens. 2R, we get the liquidity sweep. We actually get a change in the state of delivery here even. So some could make the argument that there's so much confluence here. You have a change in the state of delivery off the liquidity sweep. Because this is the change in the state of delivery, you could have potentially argued to not combine these two and just use this. It all ends up being the same candle at the end of the day, but there's a lot of confluence here. So let's see what happens. And as you can see, we break right through, showing you that this works on all time frames. Okay, let's look at Google. Google is on a current downtrend. We're on the weekly chart, and you can see some manipulation happening on the way down. You get this one leg up that sweeps all of the prior liquidity prior to moving down. You then get a failure swing where we can't go back to reach higher, breaking structure. You then get another consolidation, another manipulation high, sweeping prior to the move low. So here are more opportunities to go down into some lower time frames and try and find entry models. Okay, so once again, we come down to a lower time frame. We're on Google still, the 5-minute chart. And it does look a little bit choppy with these big gaps in here, but we'll do our best. So again, once we come down to a lower time frame, we can even get more granular. What do you see here? Accumulation, manipulation, prior to the distribution. So yes, we do have hindsight to our advantage here, but you can take the same logic. You would find the fair value gaps that got created on the way up that manipulated and swept all the liquidity, which you get here because there's a lot in here. There's even like a minor little kind of retracement. It's easiest to do all of them at the same time. And then what do you get on this candle? You get the strong close through. Most people at this point are going to want to wait for the retracement because of the displacement through. And as you can see, we go back and we perfectly retrace back into the inverted fair value gap that got created here prior to the move lower. Here's another example, although slightly sloppy. You see that there's some accumulation happening here, and there's a large drop down, massive displacement candles. And while it takes a long time, we eventually invert this. Now, usually when you're doing fair value gap inverts, you want to see a quick V-shaped pattern. So you would have wanted to see these green candles continue making a quick inverse. But this is going to show that you make the inverse, and if you continue to respect the 50% consequent encroachment, it can be another opportunity to long. So you could long here, you could have longed down in here when we were respecting this. In fact, you could have even done something like this. You could have added more. We invert the fair value gap again here. Because this was a large displacement candle, some might have wanted to wait, especially because what did we do? We cleared out the prior liquidity to the left of us. So you would have wanted to wait because this could have potentially gone down. But again, as you see, we continuously respect this new fair value gap that we created prior to the move higher. So when you start to understand the inverted fair value gaps, the ones that are useful, the ones that aren't, you can start to frame trades off of the inverted fair value gaps. Okay, I want to go over one last thing, just because the examples I was giving prior, there were obvious liquidity sweeps. Now this chart looks a little bit noisy, but all of these lines are generally going to be relevant liquidity pools. So oftentimes you're going to look for a sweep of these levels prior to moves higher. Like if you look here, London made its low, and then at New York Open, we came and we swept it prior to the move higher. So this is where you would have been wanting to look for inverted fair value gaps. As you can see, we get a strong push through, we sweep the liquidity and make a strong V-shaped reversal, creating inverted fair value gaps along the way. So when we're on the 5-minute and we see this sweep and a strong rejection, we would then drop down to the 1-minute or the 2-minute or even the 30-second, and we would start to look for the inversions. So here is where the sweep happened. As you can see, we're on the 1-minute time frame, and it's a little bit choppy here. So let's go down even more. Let's go to the 30 and see if we can find anything better in here. So you could use something like this. Obviously, there's one down here, but that was quickly inverted, so I won't even draw it. Some might actually want this one to get inverted back here. Since we didn't invert it here, I personally would be fine with this one because it was actually this leg that created the sweep. Therefore, it's this leg that I'm focused on as well as all of the gaps within it. But that is certainly, by choice. As you can see, we very quickly end up inverting that. And what do? We immediately go and support also the 50% of this inverted fair value gap. So both started at bearish fair value gaps. They then both become inverted, and then the 50% becomes the new support. Another thing to think about are higher time frame fair value gaps. We're currently in the 5-minute chart, which tends to go well with the hourly and the daily higher time frame charts. So my indicator marks out the higher time frame fair value gaps that are relevant. If we were to ever come into this area again, I can start to look for potential reversals, not guaranteed, potential. I want to see how we respect the 50% encroachment. And as you could see, we could potentially just have a quick sweep of this old candle prior to another move higher in the future. But if we were to close through this and invert the hourly fair value gap, that would lead us to a stronger bearish move. And as you can see, the more we go down, the more my indicator paints. We have an hourly inversion down here overlapping an hourly fair value gap. So if we were to invert this, we would start seeking what? The next pools of liquidity. I hope this made sense, and I hope that you can start to use inverted fair value gaps to frame trades. If any of this information was useful to you, please consider liking and subscribing. Thank you very much.